Hey everyone, welcome back to Weenie Trades. In this video, I want to talk about the SPY and the VIX. So normally I'm a bull, but this time I'm seeing a little bit of warning signs that hint towards a potentially deeper market drop. So I kind of wanted to alert you guys as soon as I could. Normally I'm a bull, and for good reason. The market goes higher and higher and higher, but for reasons that have changed ever since we've done this false breakout on the daily time frame. So right here, we're trending up, trending up, trending up. SPY hits a high of 473.54. What do? We zip back in. That's a false breakout. That's a jab. Sometimes those can signal some powerful reversals. Another thing that I'm looking at on the SPY is the MACD, the moving average convergence, divergence. And all that really is it's an oscillator, and it tells us the angle of attack. Right now, the angle of attack is steeply to the downside, and price is still reflecting that, but I think it can reflect it just a little bit more. So what are some key levels on the SPY? Well, mark your calendar, mark your price level. If SPY is closing hourly or daily above 456, 456, so if it's hanging out above 456, okay, maybe we can chop and grind higher, but I don't expect it really to get much higher than about 465, that top end of the range. Otherwise, though, if SPY is closing hourly or daily beneath that 450, let's look for some clappage. So the next area of support, I was talking about that 440, maybe short-term Monday, it's this former breakout area, 444. So think short-term 444. Medium term, I do think SPY can probably spike something like 440. And then longer term, there's a line of defense at about 420. But the thing is, if this sell-off gets really, really bad and there's some really underlying workings that may be happening, I do think SPY could see this higher, 390s to 380 area on a really big panic drop. And that'll be a pretty decent correction. I don't think that that's the scenario as of right now, but it can morph into that scenario. So I want you to be aware of it ahead of time before you guys are all freaking out or other people are freaking out. There's a lot of stuff going on in the market. It's because of that false breakout, because of the angle attack, because of the lack of buying, because of the downtrend. It's interesting to see if we are going to pop or drop. What I am seeing, at least on the hourly time frame, is a positive divergence where SPY is making lower lows, but the indicator is making higher lows. So that could be a hint short term towards that grind. But again, watch that 450. That's kind of like a flush point. Get underneath that and we could get clapped. So how I'm playing this, I'm in cash and slightly negative deltas. That means I'm a little bit short the market. I make a little bit of money as the market drops. I lose a little bit of money as the market goes higher. But next up, I want to quickly break down the VIX along with this, because this is the volatility and fear index. Again, not exactly the inverse to the S&P, but it can give a hint towards the range contraction and the range expansion. So the fear index, the volatility and fear index, MACD oscillator, first of all, gets across, gets a buy signal down there, boom, breakout. Of course, I'm not going to just buy the VIX just based off one indicator, but we also had an ascending triangle, a great pop. Right now, the VIX, if the VIX is holding above 30, that can spell a little bit more fear for the markets, and we could see those downside points. We will see something like a potential SPY 420 to 430 if the VIX starts to break out above this 38. So if the VIX is starting to break out, we can get ahead of the game. You can buy VIX calls. You can hedge with the UVXY. This is very short-term stuff. Leverage products. Do not trade these if you do not fully understand them. But they can be awesome hedges if the market goes crazy. And the VIX can affect option premiums. So as the VIX climbs, your option contracts will get more and more expensive. I like to be in the VIX as a hedge, more so for my options trading. If I can get VIX calls and the VIX explodes, well, then I can at least, if I didn't have VIX calls and then I want to trade some options, I might be overpaying for those options. So getting paid on the VIX, and then what I can do is after, if we're still thinking we might sell off, but we could stabilize, I might sell bear call credit spreads on the market. So if you don't know that option strategy, learn it. It's very important. If you learn this, you can hedge your portfolio. I don't know if there's any real reason for panic, but it's really important to mark those key levels. And there's never a reason for panic. It's important to understand the severity of how bad the market can potentially get. So it's easier to handle if that is a scenario that happens to occur. Otherwise, we could just keep on grinding based off those positive divergences. The most likely scenario, let me be clear, is we probably zigzag on around and then we eventually make new all-time highs. Probably not by the end of the year. Probably not until maybe the first quarter of 2022. We'll see. Time will tell. But I just want to make this quick Friday video. Hope you all have an amazing weekend. Mark those levels. 450 SPY could get nasty. Keep an eye on the volatility and fear index. And be sure to tune in to Weenie Trades Live to see how we navigate these volatile, crazy, sometimes algo-driven markets. And have an amazing weekend. Thanks for tuning in. See ya.